Hi, this is CH. This video is part of a series of videos titled My ABCs or Absolutely Biased Comments to share how an individual investor like you and I can try to find out more about an investment fund from public sources and do some basic research or simple due diligence before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. The information shown and mentioned in this video is accurate as of the date stated here. In this video, I will be talking about the Fullerton Sing Dollar Cash Fund. I covered the United Sing Dollar Fund from UOBAM in a video back in December 2024 and mentioned it is a viable alternative to Sing Dollar fixed deposits, and that it comes with a slightly higher returns and slightly higher risk. This is quite clearly observed in the calendar year return of the fund, which shows the fund being able to outperform the benchmark in good years and underperform in poor years. For example, it would have been tough to find a bank offering a fixed deposit rate at 4% or better in 2024. On the flip side, picking fixed deposit over the fund in 2022 would have avoided some losses. As the saying goes, there is no free lunch in the financial world. Returns and risks come hand in hand. Therefore, for investors preferring to have lower risk, they will need to consider solutions with lower returns. So, for investors who want to minimize the drawdowns but still want a decent return, let's look at another fund that has a lower risk and lower return profile, but can still serve as a viable alternative to Sing Dollar fixed deposits. Fullerton Fund Management is a Singapore-based asset management company created in 2003 by Temasek Holdings, a Singapore state-owned multinational investment firm. In 2017, Fullerton formed a strategic partnership with NTUC Income, Singapore's leading insurance company, whereby Fullerton would become the investment manager of a sizable part of NTUC Income's assets. In exchange, NTUC Income would own a significant minority stake in Fullerton. As per my understanding back then, Temasek would retain 51% ownership, while NTUC Income would take 49%. I'm not sure if this has changed since then. Temasek established Siviora Group in 2020, which is a wholly owned subsidiary that houses all the asset management businesses, including Fullerton. Among them, Fullerton is the only one that focuses primarily on active mutual fund solutions, while the rest are more alternatives and private markets focused. The importance of explaining this relationship is that Fullerton as a fund provider has probably the most solid backing you will find in the industry, with a sovereign wealth fund and a leading insurance firm in the country as its parents. The likelihood of Fullerton failing and closing shop is near impossible, because if that ever happens, there are bigger things to worry about in Singapore. Given the nature of the setup, Fullerton doesn't publicly disclose its financials and breakdown of the assets under management. What we do know from public news is that Fullerton's AUM grew from about 17 billion to 40 billion Sing dollars when the strategic partnership with NTUC Income was announced in 2017. While this is sizable in local context, it is considered relatively small compared to the bigger global fund providers in the retail space. We can get a glimpse of Fullerton's product offering capabilities through the fund range filters in its website. Majority of the funds are registered in Singapore, indicating its primary customer base is Singapore investors, as you would expect from a state-owned Singapore-based fund provider. The Luxembourg registration would cater for its UCITS funds for European and global investors, while the other country-specific registrations are probably more for specific client needs. Asset class-wise, Fullerton's offerings are mainly fixed income, suggesting this is where their strongest investment capabilities are, but also inevitably so for a fund provider that needs to support an insurance company parent. Equity solutions are few, though this is where Fullerton needs to grow to be a more diversified fund provider. Multi-asset is a natural progression by combining fixed income and equity capabilities. Cash-like solutions are few, as there is not much variety you can come up with in this category. The markets filter also shows Fullerton's offerings are primarily Asia and Singapore focused, to cater for local and regional demand. There are also a handful of restricted funds that seem to be mostly hedge fund and alternative strategies that I assume are also small parts of the overall business. In summary, Fullerton's main capabilities are in Asia and Singapore fixed income and cash solutions, which is where the fund in this video falls under. While there are not too many products available on offering, Fullerton has picked a handful of its funds and created fund feature pages for them. The Fullerton SGD Cash Fund is one such fund and has a decent looking feature page with a quick summary of the fund and a simple to understand intro video from the fund manager, as well as links to the fund documents. However, Fullerton doesn't have a proper and detailed fund specific page that contains all the relevant information of the fund. There is a share class specific page that contains only historical NAV data, and a fund documents page that contains the offering documents of each fund. So the featured fund page unfortunately doubles up as the fund specific page and yet doesn't contain enough details. As an investor, you will therefore have to rely on the fund fact sheet and other offering documents to get more details on the fund. Fullerton should really get some guidance from other global fund provider websites to improve in this area, as a featured fund page serves more for marketing purposes, while a fund-specific page provides factual and updated data and statistics of a fund. Let's go through the fund strategy as per stated in the fact sheet. The objective of the fund is to provide investors with liquidity and return that is comparable to that of the Singapore dollar bank's savings deposits rate. The liquidity refers to the transaction frequency and timeliness of the transaction settlement, which we will go through later. To understand the return expectations, we will first need to know what the benchmark is all about. There is no further elaboration on this benchmark except it says as quoted in the MAS website. The prospectus provides a bit more details on the benchmark and has a link to the MAS website. It is important to note that this benchmark is just used for performance comparison purposes, which means the fund doesn't need to be aligned to the benchmark. Let's take a look at the link to the MAS website. The link brings us to a data retrieval page in the MAS website. To be honest, MAS website is a complicated website and retail investors would have some trouble trying to find a page like this from its navigations. So, this page allows us to obtain deposit rates in MAS's database. There are various filtering options available though, such as whether we want the weighted average rate across banks or the highest quoted rate available, and also whether it includes rates only up to the maximum amount covered under the deposit insurance scheme, which is 100,000 Sing dollars or beyond. A point to note is that we can also obtain fixed deposit rates from here as well, with different tenors available. Proceeding with the data query gives us a result like this. Here is the main problem with this benchmark. MAS only provides quarterly data points as seen in this screenshot. As a financial institution, Fullerton probably has access to daily data points from MAS to construct the benchmark of the fund. However, as retail investors, there is no way for us to replicate or verify the benchmark from this MAS page, so we can only assume Fullerton's statistics are accurate. Let's come back to the fund strategy. As per described in the fact sheet, the fund is expected to hold SGD deposits with eligible financial institutions with varying terms of maturity up to 1 year, and up to 10% of the portfolio can have deposits with maturity up to 2 years. Eligible financial institutions are further explained in the description, which basically refer to mainly banks globally that have high financial quality, in particular with short-term credit rating. The SGD deposits mentioned here are fixed deposits. As we all know, fixed deposits have a higher interest rate than savings deposits, and this is how the fund generates a better return than the benchmark. Using the same MAS data query page, we can see that, for example, for Q3 2024, fixed deposit rates range from 1.25% for 1 month to 2.15% for 12 months. If we have a portfolio with equal exposures in 1, 3, 6, and 12-month fixed deposits, that would give us about 1.92% interest rate, which is way higher than the savings deposits rate of 0.49%. The prospectus also indicates the fund has the flexibility to also invest in high-quality bonds and treasury bills. Besides Singapore treasury bills, which is a naturally safe option, corporate bonds would likely be uncommon, as they add another layer of risk compared to deposits. So I imagine the fund would use this flexibility sparingly unless necessary. Now that we have understood the returns expectations of the fund, let's take a look at liquidity next. The fact sheet only states that the fund has a daily dealing day, with a cutoff time of 5 p.m. Singapore time. The prospectus does have a transaction settlement section, but states only that the settlement is within 7 business days. While this is meant to give Fullerton flexibility to make adjustments, it is not ideal to omit liquidity terms for a fund like Fullerton SGD Cash Fund, where liquidity information is important. The only place where I found clarity on liquidity terms is back in the featured fund page, where it states redemption settlement is next business day. While it is not perfect given that you can withdraw monies from savings deposits on the same day, at least the 1 business day delay is still better than the usual 3 business day settlement for normal mutual funds. There is also a caveat in fine prints that states that the fund has a 25% AUM redemption gate on the dealing day. This means, in an extreme scenario where many investors want to exit the fund quickly, the fund will only allow for up to 25% of the fund AUM to be redeemed on any day, and the other outstanding redemption orders will probably be rejected or pushed to the next dealing day. This is a clause to give the fund enough time to orderly exit its holdings and has a very low likelihood to happen. So in summary, the fund strategy is to provide a solution that sits in between savings deposits and fixed deposits, by providing return expectations similar to fixed deposits with less than 1 year of maturity that would be better than savings deposits returns, and at the same time, also providing daily dealing liquidity like savings deposits, but with 1 business day of redemption settlement. By keeping the fund primarily invested in fixed deposits, the fund can also minimize negative returns, which is crucial for money market funds. The Fullerton SGD Cash Fund was incepted in 2009, so there is about 15 to 16 years of track record now. Fund AUM is over 6.5 billion Sing dollars, which is a good, stable size. Money market fund portfolios are generally quite straightforward. Fixed deposit risks are mainly the counterparty risks that are the banks that took your monies in exchange for the interest rate to pay back to you at the end of the tenor. So there is no point to look at country or sector breakdown as compared to other mutual funds. The fact sheet lists out the top 5 counterparties that happens to have 3 Japan banks. Presumably they offer a better rate for Sing dollar fixed deposits at the moment, but also banks from Middle East and Europe. So the counterparty banks do come from all over the world. The maturity breakdown shows that the fund has over 40% exposure in fixed deposits with less than 1 month of maturity, and another 50% in fixed deposits with maturity less than 3 months. So even though the fund can hold deposits with maturities up to 1 year, there is no need to if shorter term deposits can offer decent or better rates. There is a minus 10% cash exposure, which is explained in fine prints as negative balances due to cross-month trades. Gross yield is 3.3%, which is comfortably above saving deposits rates. While there is no mention of fund managers in the fact sheet, the intro video in the featured fund page highlights Darren Tay, who is the head of treasury management in Fullerton, so we can assume he is the lead manager for this fund. Morningstar website shows that the fund has 2 other co-managers, Dilys Loy and Michelle To. All 3 of them have been managing the fund since its inception in 2009. There was another co-manager, Oi Yan Yan, who stopped covering the fund in 2023. Having the same people managing the fund through time signals the stability of the team and the firm, which is a good thing for investors. Finding bios of the fund managers is difficult on both Fullerton website and the internet. Morningstar does have Darren's bio, but not for the other 2 co-managers. From description, Fullerton and this fund is the first career for Darren since 16 years ago. The performance of the fund as per presented in the fact sheet looks spectacular versus the benchmark. However, as explained, the fund holds fixed deposits that would naturally have higher interest rates than savings deposits, so it is a given for the fund to end up outperforming the benchmark significantly, especially in high interest rate environments. Let's compare with the United Sing Dollar Fund that we mentioned at the start of this video, which invests in bonds instead of deposits, and therefore has a slightly higher return and higher risk profile. It is clear that in the long run, bonds will give higher returns, but there is also more volatility and it is possible to have negative returns at times, which is not ideal for low risk profile investors who want to avoid losses. In the years when bond markets suffer, a deposit-focused strategy will obviously perform better. Also worth noting is that in the past 2 years of high interest rate environment, a deposit-focused strategy actually has not lost out too much compared to a bond strategy, which suggests a fund like Fullerton Sing Dollar Cash Fund may be a much safer investment yet reap decent returns if interest rates do not go down too much in the future. Here is a 10-year performance chart comparing the two funds for better illustration. And also a 2-year performance chart to show that the returns for the two funds were near identical. And how does the fund compare against actual fixed deposit rates? We can get a few using the same MAS data query page to obtain the weighted average rate available by quarters for local banks that looks like this. If we just do a simple average across maturities and quarters, that gives us some yearly numbers to compare against the fund performance. The numbers show that the Fullerton Sing Dollar Cash Fund does give a relatively better performance than the weighted average fixed deposit rate. There are a few possible explanations for this. Firstly, the fund has the flexibility to invest in Singapore Treasury bills. This gives the fund a wider range of investments to choose from and helps the fund if there are Treasury bills with better yields than deposits. Secondly, every bank offers deposit rates differently. As the fund can place fixed deposits with overseas counterparties, there may be some of them that offer higher interest rates on deposits than local banks. Thirdly, the investment team can adjust the underlying positions actively to change the maturity exposures in view of interest rate changes. In a fast-changing interest rate environment, shifting maturity exposures can lead to big performance differences. For share classes of the Fullerton Sing Dollar Cash Fund, there are probably 4 that retail investors may come across. A accumulation class is the most commonly available share class and is incepted at fund launch in February 2009. C and D are distribution classes and should be created for exclusive distributors only. C class, for example, is available only via Grow with Singlife. C class pays out distributions every 2 months, while D class pays out distributions every 3 months. Distribution yields of both classes are kept at around 3% per annum currently. A, C, and D classes have a management fee of 0.16%, which is a discounted fee from the original 0.25% as per stated in the fund prospectus. Adding other expenses gives a TER of around 0.17% to 0.19%. Up to 60% of the management fee may be paid by Fullerton to distributors as trailer fees. Fullerton currently allows distributors to charge up to 0.5% subscription fee for A, C, and D classes. Although for money market funds like this that have generally low return expectations, I strongly encourage you to request subscription fees to be waived off. R accumulation class is intended for distributors that do not collect trailer fees and subscription fees, which means these distributors will earn fees from clients from other sources, for example, through advisory services, etc. As such, R class comes with a lower management fee of 0.1%, and you will probably find it available with a few distributors only. For a fixed deposit-like fund strategy, I think the usual A accumulation class is good. These share classes do not have a minimum investment amount requirement. Therefore, you can subscribe or redeem in any amounts, just like topping up or withdrawing from a savings account. So if you do need some cash, you can just place a small redemption on your position. These share classes all currently have NAV at around 1 Sing dollar, and the fund allows for NAV truncation to 5 decimal places. Do note that some distributors may have a minimum transaction amount or transaction fee, which has nothing to do with the fund. Now that we have gone through the fund, it may appear that this is actually a pretty straightforward fund strategy. So, why can't we replicate this ourselves and just put our monies in a few fixed deposits with different maturities? There are a number of benefits to go with a fund like Fullerton SGD Cash Fund. As a retail investor, the range of fixed deposits available to you is limited to the banks available locally. Plus, you do need to set up an account with each one that you intend to put your monies in. Fullerton, as a financial institution with a larger amount of capital in the fund, can access to counterparties globally to find the best fixing dollar fixed deposit rates. It is also impractical to create a daily liquid portfolio on your own by owning multiple fixed deposits, unless you attempt to have a ladder of fixed deposits with maturities on every day consecutively for 1 to 3 months and have them auto roll over, which is quite a lot of work to monitor and manage. With no minimum investment requirements, adding and reducing investment amounts in the fund is just like topping up and withdrawing from savings accounts. Given we have observed drastic interest rate movements in the past decade, it is useful to have an active manager helping to assess the markets and make adjustments to maturity exposures to benefit from interest rate changes. For all the work being done in the fund, it charges a low 0.16% management fee, which translates to just $16 per year for a $10,000 investment. Given the fund has delivered 1.56% per annum return in the past 10 years after fees, I think this small amount of management fee is worthwhile getting the fund to do the work on your behalf. Finally, let's summarize our findings. With Temasek and NTUC Income as parents, Fullerton enjoys high stability in its business, which is good for investors. As a local asset management business set up by Temasek, SGD fixed income and cash management is Fullerton's forte. So the Fullerton SGD Cash Fund is a product where Fullerton has the best expertise in. While this is a fund and returns are not guaranteed, the nature of the fund strategy and Fullerton's prudent management has led to no negative returns in the fund since inception, which for fixed deposit investors is an important plus point compared to bond funds. Fund performance has been decent and are comparable to, if not better than, average SGD fixed deposit rates. Through the fund, investors get daily liquidity terms. Coupled with no minimum investment requirements, making adjustments on the fund position is nearly as easy as topping up or withdrawing from a savings account. One downside is the 1 business day redemption settlement. It would be ideal if the fund can provide same-day settlement, which would make it even closer to savings accounts handling. Also, Fullerton can consider changing the benchmark of savings deposits rates to fixed deposits rates to better reflect the fund strategy. There is not much purpose to have a benchmark that substantially underperforms the fund. Fund manager information is lacking, which appears to be a common issue I see with the funds I review recently. Having some brief intro to the managers and the investment team will give a more human touch to investors. In conclusion, the Fullerton SGD Cash Fund is a very decent pick for SGD fixed deposit replacement. While it has a slightly lower return expectation than SGD bond funds, having a lower risk with no negative returns is a strong plus point for investors needing that capital preservation consideration. This concludes my absolutely biased comments on the Fullerton SGD Cash Fund. If you find this video useful and would like to see more related contents, please subscribe to the channel. Thank you and have a great day.